Well, Bitcoin's done the unthinkable, testing the 50% and is about to close underneath that level. We'll have an answer to that by the end of the video. It's also lagging specific cycles that we've been tracking now for many months. This is our 5 and 10 year combined cycle. It's also lagging against the S&P 500, which has shot up to a new all-time high, potentially on the back of massive short squeezes with the AI bubble going on. So I've got heaps to cover along with these top 4 points in today's video. Like, subscribe to Home and Macro Cycle Analysis. 50% level, 3-day signal, smorgasbord of announcements coming up, and the short squeeze into this blow off top bubble. So one of the final pieces I think that can hold Bitcoin to this level and then potentially get into its own move higher into new all-time highs, hopefully even a blow off top. Now, leading up to this point, 3 specific things have happened. We've had the 3-day down signal, basically the 3-day reversal signal, which came in from the all-time high. We've used this throughout the cycle. If you have been following the channel, thank you very much. Thanks for all your support, of course. And if you haven't, quick recap. December, it happened right from the all-time high. 1, 2, 3 red arrows telling us the market wants to go down. And that is saying that the buyers don't have control anymore and the sellers have control. That's what that signal is used for. We also saw it in March 2024 from the all-time high. Basically, those 2 times were the most extreme market sentiment for Bitcoin that we saw. There's the all-time high, 74K, 1, 2, 3 red arrows. Forget the color of the bars or the candles. 3 red arrows saying that sellers are in control. And of course, we saw the market sell off over 30% in both occasions. And it was underneath those highs for many, many months. And now we've got another one here. For that high, just short of extreme greed, but very, very close. And since then, market has fallen back 18% and is now down over the last 3 weeks. The second thing is a breakdown of the previous tops and closes underneath those levels. And then the third thing so far has been multiple rejections now at the 50% level. So that's this 115-ish level, depending on which chart we're looking at. Coinbase is showing 115, double tops in here at around 116, but the closes are underneath those levels. So from this point, with the 50% level, I'm looking at 2 options. There's obviously a plethora of options, but let's look at 2 of them as just a strength and weakness play. Close underneath, we pull back into the support zone of about $108,000 and then rally up to break the 50% level. So we need to get above that, which will be above those 2 double tops as well. Similar to what happened in September. We were watching these levels very, very closely. This top and this top, that was also a double top. You see the market sell off, found a higher low, and then ran up into a new all-time high price. Hopefully it's going to give us more than what it did in late September, early October. But of course, that's going to come down to whether there's any more interest in the game. That's like the best case scenario. I think the worst case scenario is that we find resistance now, pulls back, and actually takes out those lows. We don't have confirmation of which one is next, so we have to be open to all options. That is just how trading and investing goes. Now, if you need that certainty, there are plenty of people that will give you that certainty, but the markets are not certain. That's one thing that we are certain about, is that the markets aren't certain. You just have to get used to it. In terms of the movements from this point, I've got a clean line here, but of course it's going to happen in any number of ways. You can see how the markets work. You do have a downtrend, but it could happen with many different swings to the upside, corrections and rallies and so on. So I think you guys get that. So moving to the downside, if we break these levels, I think then the market would probably come back up, test some of these lows, which could then be a failure signal, come back down, test another few lows here, which could lead into a lower high. Now, does that lower high come at a higher, much higher price, like around 120 or 115? Or of course, we move this whole thing down and it's somewhere around the 100 level. We just don't know yet. And could this low extend even further? Again, another thing we don't know. The main point of this is that it's in a weaker position, and that's what we use the 50% levels for. So the 50% in the short term, we start to clean a few of these things up here. That is the level there, 115. It hasn't changed yet because the market has not given us a new high or a new low. If it does break above, then we can start to readjust these targets. It has to break above 126 or below 103. Now, if it does break down, well, then the 50% level worked yet again, told us that there were some more bearish signs here and that we needed to prepare for any sort of downside. Now, to the downside, we have a longer term 50%. This is from the April tariff crash low to the current all-time high price, which is why $100,000 is a pretty serious number for Bitcoin at the moment. It also comes in close to the swing low before the market basically rallied up into this all-time high price, the current all-time high, and that's at 98K. So between this 98 and 100,000, if we see any sort of breakdowns from that point, I think we're more likely on the path of a breakdown to test this zone and probably the prices there in the high 80s, and then start any sort of failed rally to the upside. I think there's a low chance if it breaks down that it would then move into new all-time high prices. But on the move up, you'd probably see some pretty extreme greed because, of course, the price is getting very close to that all-time high and people are getting very excited that all the Bitcoin that they've bought in the last 12 months may finally show a gain, because really where the price sits, it hasn't really gone anywhere since the November, December top of 108K. We're barely there now, 114K. So really not much has happened in the last 12 months. That's the 50% looking at the strength and the weakness for those potential moves to the upside or the downside. The 3-day signal we have covered, and two more that we're going through, which is a smorgasbord of announcements and the short squeeze. But first, the roadmap to the end here, looking at the lagging nature of Bitcoin at the moment. The blue line is the current price of Bitcoin. The red line is our 5 and 10 year cycles. We use those cycles as that's what Gann has said to use. Got nothing to do with the 4-year cycle. I'm not using these 4-year cycles. Eventually they'll break, and it looks like they're actually starting to move a little bit closer to the time frame, meaning it looks like more traders, more investors are starting to front run those 4-year cycles. So instead of them buying up closer towards that 4-year point or the halving point, they're starting to do a little sooner. So you're starting to get this shift of the old 4-year halving cycle. 5 and 10 years is what we're going to use because that's the data that Bitcoin has. Once we get 20 years, 30 years, 40 years, then we shift to that data there. The lagging nature is that by this stage, we should be above the all-time high prices. And for November, starting to climb higher and higher based on the 5 and the 10 years. At the moment, it's really not there, which is why I'm still a little bit cautious of any move to the upside unless Bitcoin can break the 120K level and hold above that level to consolidate for the next move higher. The forward returns are also looking a little shaky here, with October marginally in green, sometimes in red. We only have 3 days to go, 28, 29, 30, 4 days to go before we get to the closing price, which traditionally has been the best month for Bitcoin. Looking at the stats, most green months in its history. October there at 75% if it does finish green. Otherwise, quarter four has also been a pretty good quarter for Bitcoin, and it's just starting to lag here a little bit. The rest of the data has continued to favor the bears. There has been a continued drop-off in the 7-day exchange volume. So we want to see more interest come back into the market to take these prices higher. And for the liquidations, we don't have any other signals here. It's remained around 300 to 400 million. The long-short ratio is pretty well balanced, so we don't have any other signals when it comes to liquidations. For the USDT dominance, it has continued to hold the line after giving us some false hopes that it was going to break the 50%. So while this remains above 4.75%, this is of the stablecoins, people still holding their stablecoins, it seems unlikely that we've got that continuation for the bull market for Bitcoin and cryptos, but we do have a bull market somewhere, and that seems to be in USDT. As we've talked about this week, or at the very latest, I think first week of November, we need to start seeing this thing take off. And ideally, it happens within the next 7 days. We get the breakdown here, and on the weekly chart, it could very well be. We don't want to see this hang around above the 50% too long, as it then just leans itself towards a bearish cycle, basically end of the cycle for Bitcoin and cryptos, putting in those higher lows like it did in the last cycle. So you got the major higher lows around the Bitcoin all-time high price. So here is the Bitcoin chart, there is the all-time high. There is the April all-time high. And you can see USDT dominance was starting to gain some strength at that time. It also put in higher lows as Bitcoin began to break down and then eventually took off. Everything got wiped out of Bitcoin, cryptos, and everyone chucked their money back into stablecoins while investors waited for the next bull market to begin. And here we have it. There's the bottom of the bull market. There is the top of USDT dominance. And then, of course, the dominance began to fall. Bull market takes off. And it seems like we're in that process now. So we need this to happen very, very soon. Breakdowns of 4.75, breakdowns of 4.6, and ideally below the 4.1, which then could take out 3.7. So there's a lot of support to the downside. Bitcoin dominance continues to go on the rise, which means, well, altcoins aren't going to have a very easy time over the next period, whereby dominance continues to go into Bitcoin and into stable coins. So there's just less money floating around. It looks like there's still further to go here, possibly up to around 62% now that we've hit 60%. And the overbalance target at the moment to the downside to spur on altcoin season is a breakdown of 56% on the dominance. That is subject to change if a new top comes in above 66%. But for now, that's where the numbers lie. Others chart is also not showing too much sign to the upside. It continues to fail at 7%. The saving grace is that it still has a base forming here around 6.6%. Breakdowns of that, well, then we start to see the altcoins continue to slide against, well, Bitcoin and stablecoins. Ethereum also has been rejected at 50% twice, but it's still just on the daily chart holding above previous support and previous resistance levels. So minor support, major resistance, holding above those levels. There are all the previous cycle highs at around $4,100. Pullbacks, okay, even if that does break, as long as we keep putting in higher lows above $3,600, $3,700 to then attempt another chance at breaking 4,200. You can see how important 4,200 has been now for Ethereum. So things are still looking okay at the moment. So not a complete breakdown at all. And of course, some of those signs that people love to point at in regards to the cycle continuing, and this time's different, is of course loans, collateral, and ETFs, and the president and so on, all using cryptocurrency and starting different funds. In this case, JP Morgan, to let institutions use Bitcoin and ETH as loan collateral, marking major Wall Street shift. I think a lot of this has been known. So maybe we are in a space of buy the rumor, sell the news. But at the end of the day, let's let the charts do the talking. I'm still very cautious, especially being in these markets now for many, many years, and the 18-year cycle coming to a head, getting very close to this peak. I did talk about the possibility of us hitting the peak now in Q4, potentially rolling over, which I'll share with you in just a moment, the reasons why. But looking back at the lows, as I posted in 2022, I'm very, very bullish at the lows. Even if it's not the exact price, I'm just way more bullish at the lows. And I think the lows are much, much easier, which is why I, day after day on the videos, stress to the viewers, to you guys watching, to the public, to whoever, is even if we do see the market roll over and it is a multi-year bear market, do whatever you can to keep learning about investing and trading, however you do it, because the opportunities generally come around the lows, and the lows typically for most people are the hardest times. I think the tops are the hardest times, but most think the lows are. I think the lows are relatively easy compared to the tops, because you see a lot of fear there and the price just isn't going down any further, as I've posted about for many, many years on the channel. So in regards to that top, the 18-year cycle and the home builders ETF coming to a head, this may be the top, and this may also be the macro lower high. We use this on the 18-year cycle as a potential early warning sign that the 18-year cycle is coming to an end, because of course we're looking at the home builders' profits on the stock chart. And if that's the case, well, then there's probably not far to go for the S&P 500, which means there's not far to go for Bitcoin either. And so looking at the XHB, this is your home builders ETF, it topped out in 2025, 2026. There's a couple of reasons for that I'll leave for other videos. Here's 2026 though. It was 18 months later that the S&P 500 topped. 18 months. That's a year and a half after the home builders topped, and it was down by 56% by that stage. It had put in a macro lower high several months later. Here is the top. Here's the macro lower high about 10 months later. Look at where we sit right now. Here is the top. Here is the macro lower high. No way. 10 months later. I thought it was roughly a little different, but there's the top. Yep. 10 months later. Okay. So here we are with another macro lower high 10 months later. Can it repeat almost exactly the same? That's the question that is now left for the cycle to be answered. And if that's the case, well, then we continue to head in the direction of the everything bubble finishing at the peaks and then eventually rolling over. Now, I've got a big update on the economic report coming to you if you are subscribed to the free report that is coming out today. If you're not, link in the top of the video description, report, and of course, name, email address, and you'll be on the email list to receive that in the next 12 or so hours. So for a few more shits and giggles, looking at the time frame from that top to where the S&P 500 topped, so high to there, it's about 8 months. What if the S&P 500 topped in about 8 months' time? That would put us out to May 2026. And I know what you're already saying. Well, there's a possibility of the Fed changing hands there. We've also got some major timeframes coming in April 2026. You know, it's 6 months from October, which we've seen a decline there with Trump and tariff things going on. It's also a 12-month anniversary of the tariff collapse as well. You can see April 2025. So there's some major dates coming out in the first half of 2026. So that's what I've got here for the S&P 500, roughly 6 to 12 months later. Now there's some bigger, more economic announcements coming out in the next, say, 2 days to 1.5 weeks because the US government is still shut down, so it may impact some of these announcements. But one that it shouldn't impact is our FOMC meeting, which is almost a guarantee, according to the market, that there is going to be a rate cut. Probably not enough considering what the market wants, because you can see we've had cuts. They want a lot of cuts. But nonetheless, we'll probably at least see a cut at this meeting. And then over the next 1 to 2 weeks, there are several major announcements which hopefully aren't affected by the government shutdown. And that's your PPIs, which we know the Fed uses a lot, earnings, job reports, unemployment claims, you name it. There's a lot going on there for the US that is due out in the next couple of weeks. And I think the market doesn't necessarily care so much about these announcements. I know people believe that that's the case and that it's always due to another announcement, but I'll make my case here. And we saw it just a few weeks ago, right? And then I'll get to my comment over here. But now we have seen new all-time high prices on the stock market. And at the time when the announcements come out, if you're an absolute short-term trader and you want to trade the volatility, then yes, you're going to need to know about these announcements to the minute. But if you're not, and you're a bit more of a longer term, anything from holding a market for 24 hours or longer, then they're probably not going to affect you too much. New all-time high on Friday, a gap up, new all-time high. And yep, those gap people are going to be saying, well, the gap's got to be filled. Sure, it could be filled, but you've still got the direction here going on. And of course, we're still seeing higher prices. Talked about that several weeks ago. This was an interesting one here from Subitrade. On Thursday, the S&P 500 was at an all-time high. On Friday, it crashed more than 2.5%. So where is that on the chart? Here is Thursday at an all-time high. Friday, 2.5%. Actually crashed 3.3%. Huge day. And look at that reversal. So at the time, the data was saying such quick pullbacks from all-time highs always saw the S&P 500 go higher 3 to 12 months later. This is not the end. And I agree, that wasn't going to be the end. Everyone freaked out, of course. And look what happened. It did not even take 3 to 6 months, all-time high. And by last Friday, 15 days, 11 trading days. So 2 weeks later, it hit a new all-time high. And then, of course, the last 24 hours, another new all-time high. And then literally, probably as I'm filming this, another new all-time high. So day after day, just keep following the data here. It's saying 6 to 9 months later, well, 100% of the time we're going to see the S&P 500 up. And then you start to see a little bit of a shift there. 1 year later is 88%. So still very high chances that we're going to see higher prices for the S&P 500. But I think that starts to lean itself towards something like what I'm seeing with the 18-year cycle, where maybe we've got another 6 to 12 months left, but then some of these data points may suggest that 1 year later you're going to see higher prices for the S&P, but it doesn't necessarily happen. And this is where we're starting to get some of those readings. So why is this happening right now, and what does it mean for Bitcoin? Of course, that's what most people are interested in. Of course, they're altcoins, but key growth and cyclical sectors dominate new highs. S&P 500's reached new highs, so 12% of stocks have gone to new all-time highs, and we're starting to see the breadth widen. So people were so concerned that it was only a few stocks taking this to new all-time highs, like just those few AI stocks that were feeding in on each other. But no, we're seeing it across the board, or across technology, industrials, communication service sector, simultaneously registering 52-week highs. So historically, when this has happened, we generally see the S&P 500 go higher with a 94% win rate higher. Another reason why this is potentially happening is the short squeeze that is getting, the shorters are getting absolutely hammered trying to short the market over and over again. And so until they all just capitulate, I think there's still further to go. So why the short squeeze is hammering the quality factor. Since the market bottom in April, so this was the tariff low, a basket of the most shorted US equities has more than doubled, with a staggering 30% surge just since early September. So a month and a half, 2 months, according to strategists at Goldman Sachs. So these are all the perma bears, the bears talking about how the market has to go down. And of course, there's no reason why it has to go down just because it's gone up too much. That's a bubble. That's a bull market. That's a trend. Prices just keep going higher. And we've seen this very, very big gap to the upside. Maybe it gets filled, but really the lesson here is try not to short a bull market. A raging bull market continues higher and higher and higher, especially after a significant pullback. It's usually like a big rubber band just getting pulled, and it will snap back and flick you in the eyeball like it has done to these short sellers, basically getting absolutely annihilated. And the everything bubble has shown that. We've been going higher and higher through this whole period. The everything bubble for this cycle is a combination of the 18-year real estate and economic cycle and the commodity cycle, which are due to peak at the end of this cycle, sometime mid to late 2026. It doesn't mean that all of them are going to peak at the same time. We've seen the home builders potentially peak here. I think Bitcoin is not going to make it through to the end of the 2020s. I don't think we're going to see a new all-time high in that. Happy to be wrong there, so make sure you screenshot this or whatever it is. The S&P 500, potentially another top here, 2026, which is what I'm, what I've talked about here in this video. And of course, precious metals, I think they may be the ones that go higher, but it looks like they're in stall for a pullback at the moment, as we've seen with gold. So we've got a new 3-day reversal signal confirmed for gold, down, down. This one here is inside, so it's a lower high, higher low. You can see it easier on a bar chart. And then another down day and another down day just to add to the mix. So we've got the 3-bar down. You'd have to go back and test this for yourself to see how well it works in gold, but it has a reasonable good hit rate. One here that pulled it back, another chance to the top, and then it went flat for a long time. I think we're potentially in that sort of stage again. This is the local top. We've got a long consolidation. Even if it does touch a little bit higher, I think this is going to be the time where we see the longer consolidation while the interest goes back into stocks, new all-time highs. They follow their cycles, grinding higher. The AI bubble continues to spur on the counts. And of course, the NASDAQ also continues higher as well. And then things start to rotate yet again back to precious metals. Now, does that give us anything to work with when it comes to Bitcoin? There is still that chance because Bitcoin has not broken down. It hasn't broken the $100,000 level. It hasn't broken the $108,000 level. There is still that chance that with this move higher for the S&P 500, that Bitcoin can keep running alongside it for a period of time. We know Bitcoin does top before the S&P 500 tops, and gold is also having this pullback. So maybe there is some interest returning back to Bitcoin. And I think that's going to show if Bitcoin can break back above 115 and hold there. That's pretty much where we need to go next to then try and take out that 120. So the 50% level, super important at this stage. The 3-day signal still intact here and basically has held down the market for quite some time with the largest pullback we've seen since the tariff collapse. So the 3-day reversal signal worked yet again. Huge announcements coming up over the next 1 to 2 weeks. And that short squeeze blow off top bubble still playing out for the S&P 500. Like and subscribe if you haven't already. I hope you guys have had a fantastic day. Thanks again for all your support on the recent videos. Try to get back to as many comments as I can as well. So if you've got questions, let me know. And otherwise, I'll see you on X and Instagram. Only the official links are in the video description. All right. Thanks again, guys. Take care and peace out.